Well, we've called you in for some quick fire questions because we've had a few about the economy and frankly, no one else better to answer them except you. So first, MF sent in a question by visiting newstatesman.com/you ask us. And they asked, when the UK borrows money, who are the lenders?
That's a great question, MF. I take it you're a Prince fan. But I think I really like this kind of question because it helps us to get to the core of who is really in power in the country, who makes decisions that really affect us, and often they're people we might not have heard of. So how the government borrows money is governments can take out loans, and they sometimes do, but that's pretty rare. The main way in which governments borrow money, especially for developed economies, is through issuing bonds. So a bond is like an IOU. So it's an agreement to pay somebody back a certain amount of money at a certain date. And the reason that somebody would take the other side of that agreement is that you also give the person who's buying the bond a coupon, which is a regular payment. So, for example, I might say to you, MF, I'd like to borrow £10,000 and I'll pay you back in 10 years' time. And every year between now and then, I'll also give you £100. So something like that, and there are lots of these different types of arrangements. So rather than going to, some other banks or another country or the IMF for a loan, the government goes to the market and says, who would like to buy this chunk of debt, which we are selling to the market, and it will go at this price and it's for this long. So there's lots of variations. So there's lots of short-dated bonds that they sell that might have a kind of higher interest rate on them. And there are some really long-dated ones. So I think the longest-dated bonds that you can buy would be paid back in the 2070s. So it's like having a savings account in a way for the buyer that will pay you a fixed rate of interest until the 2070s that is guaranteed.
And who sets that rate of interest? Does the government say this is what we're prepared to pay, or
so that's who these really interesting and very influential people that most of us haven't heard of are. That is the Debt Management Office. So that's part of the Treasury that decides how best to arrange the mix of bonds that are sold, to manage the risk that comes with borrowing in that way, and to get us the best deal from all of these people. So the investors that buy these bonds from the market can be anyone. You can buy British government bonds are called gilts because they used to be bits of paper with a bit of gold leaf around the edge. So they were gilt-edged securities. The main people that buy them, so that according to the latest figures that I could find from the Debt Management Office, the biggest holders of our government debt are overseas investors, which is a bit vague. But those guys, and the third largest holders are insurance companies and pension funds. And when we talk about overseas investors, what we probably mean is also insurance companies and pension funds in other countries. So
anyone actually in this country who's got a pension, we're kind of lending the government money.
Yes. Yeah. So there's two ways the government gets money from you. It gets the money from you via taxation, and then it also borrows money from you in order to pay for stuff that way. And in return gives you or your pension fund manager a stable investment to hold, so that your money grows hopefully at a higher rate than inflation, and you are provided for in retirement. So the most important answer to your question, MF, in terms of who lends the government money is you.
That's very nice of us.
It's also the Bank of England, which is owned by the government, which is a bit weird, but that's a whole other thing. That 30% of the government debt is owned by the Bank of England as well.
If we're lending the government money, it just doesn't really sound. It's all a bit made up, isn't it? Is it all just, it doesn't really exist, this money, does it?
House of Cards will come down. I think the bit that people tend to say is all made up. Some people tend to say, most people would say it's very real, is the 30% of debt that's owned by the Bank of England's asset purchase facility, which is the bonds that it bought during QE, which is all because the government owns the Bank of England. So how can the government owe itself money? I think in terms of citizens lending the government money, that to me it makes sense, because that's what a nation is, right? It's a group of people who choose to participate together as an economic system. We directly give money to the government to, say, spend on a hospital should we need a hospital. And we also get other people to buy government bonds on our behalf that make their way through the government's finances and also might be spent on the hospital, so that our investments can grow and also will be provided for in that way. So I think it makes sense to me.
Yeah, just we don't have any say over it, in fact. It's just other people making these decisions on our behalf.
Yeah.
Second, we got this question which came in via our YouTube channel. This person wants to know how many people are considered economically inactive, and that's neither working nor looking for work, and how many job vacancies currently exist.
Okay, so the really quick answer to your question is 9.25 million and about 831,000.
So actually, if you break that down, when the government talks about getting people back to work, if all those who were economically inactive started seeking work, there actually wouldn't be enough jobs. Is that what you're saying?
Well, yes, but so the 9.25 million is just people who are of working age but aren't in work. So that's about getting on for a quarter of people who are of working age are not working.
But a lot of them are students, aren't they?
Yes, but there's a lot of students. So that could be people who have retired before, so of working age, like 18 to 65. So it could be there are lots of people who have retired early. Lots of people retired early during or shortly after the pandemic.
Mm-hmm.
There are lots and lots, and this is the big economic problem: is there are lots of people who are ill. There's about 2.8 million people who are economically active because of long-term illness, and that is the government's biggest worry. And lots of those have sort of multiple conditions and things like that, which are very concerning. That's keeping people out of work. But the other thing that this question brings up, and why it's a really good question to ask, is that recently lots of people have started to talk about the labour force survey, which is where these statistics come from. A survey that's done by the Office for National Statistics, and that the response rate to that survey has not been high for a long time. And it started to become more and more apparent that there could be as many as 1 million workers missing from that survey. So it could be that the statistics that we have on the number of people who are really participating in the economy is actually quite badly wrong. So there's been a very good report by Bloomberg this week on the state of the ONS, with some insiders talking about what's going on in there as an organisation. But I think actually a lot of people have known for a long time that the labour force survey wasn't perhaps as accurate as it could be because of the low response rates, especially since the pandemic. So that's not to say that actually everyone's fine and there aren't millions of people who are out of work due to long-term illness. That is very clearly a problem, but it is also a problem that we don't really know how many people that's really affecting. So unfortunately, the best answer to that question is we don't really know. On vacancies, we do know that is accurate, but on the economic activity of the wider population, it's hard to say.